Welcome to Business Digest Radio, Southern Colorado's source for business, policy, economics, workforce, and innovation. Brought to you by Colorado Media Group. Here's your host, Dierks Hobbs.
All right, good afternoon, everyone. Welcome to Business Digest Radio. I'm your host, Dierks Hobbs. Welcome to the program. We have a very special program today. We're going to do a very deep dive on all things Venu. We've got CEO J.W. Roth sitting across the board from me, and we're going to have a pretty in-depth discussion about the construct of everything that's going on in and around this organization. Obviously, this has a history in Colorado Springs, the Ford Amphitheater being the first one to come online. A lot of excitement around it. Another summer booked full of shows. And we just want to better understand what the financial apparatus is like and how the vision of this big project is starting to unfold as the various realities start to come online and face the expansion projects that are going on all over the country, most notably in McKinney, Texas, and Broken Arrow, Oklahoma. So lots going on here. I want to give him a lot of airtime to unpack this for you so we can better understand the mechanism underneath this and the thought process of how they're engineering these investment packages. So it's a it's gotten a lot of buzz, a very attractive company. There's been some dips in the market with this particular stock. He's going to address that, as well as some other relationships that they are forming all around the country. So JW, I want to get right to you, my friend. How are you?
It's good.
Good. I just want to check in on you personally first.
I'm telling you, I like I told you a minute ago,
yeah,
my travel schedule has just been a nightmare, but it's been fun. We're doing well. We're excited about the summer coming here at the Ford, and we're just excited about all the projects that we have in one. So I thank you for having us.
Well, I'm glad you're here because
good to be here.
You know, you have to have this conversation almost every day.
I do.
Okay. And almost every day this conversation changes.
Sure.
Right? Because the dynamics in the market are changing. We've got wars over in the in the Middle East and all kinds of influences that are helping people or giving people a reason to either be puckered up a little bit or get out there and take some chances and do some aggressive investing. Before we get into the deep dive, like I said, I wanted to check in on you, see how you're doing. Sounds like you're traveling like a madman. Okay, you're putting the frequent flyer miles on. Do you have a black card yet?
We are. Yeah. I need one. I need one.
I was going to say.
I mean, we're building 5 markets.
Okay,
and so you know, it'll take a toll on your sleep.
It certainly will.
Yeah.
It certainly will. Well, I'm glad to see you're well.
So
take us through kind of what you're seeing right now in front of your plate. What's happening on the Texas front in particular?
Well, we're aggressively growing, right? And so there's 2 pieces to that. You've got the continued market expansion as we start up the East Coast. And we're starting to make those announcements. We started with Chattanooga. We've got 3 more in the pipeline that'll come over the next 90 days or so. They're going to take us from Florida up the East Coast through the Carolinas and then out through Tennessee. That'll result in 4 new venues going in there. That'll be sort of the next 14 or so months through entitlement, and then 14 months or so to get them built. So.
Okay.
You know, 29 and 30. And then we're aggressively building in Oklahoma and Texas. And so we're planning opening in Broken Arrow on the 23rd of October. We're booking that venue as we speak for late November and December. Now remember, of this year, the shows will start coming up here in the next few weeks. We'll put shows on sale in that market. And remember, everything that we're building is multi-seasonal, it's multi-configurational, and it's omni-content. So think of the Sphere and sort of how they operate. It's exactly what we're building. All pulse systems inside. So very different than your typical amphitheater. In fact, we have hired Operative Word out of LA to find us a new word. I hate the word amphitheater.
Yeah, I saw that.
Yeah. So we're starting down that path, and we should have that announcement coming in the next couple of weeks where we are, sort of taking a page out of the playbook of the Sphere, right? They did a really good job of branding who they are. And so when you think of the Sphere, you think of omni-content. you think of the design, you think of the ambiance and the experience of going to the Sphere. Have you been to the Sphere?
I have not actually.
It's an incredible, an incredible venue. I saw the Eagles there. I'm getting ready to go out and see Kenny Chesney there, but it's an unusual venue. And that's what we're building. We're building venues that are just like that. So, when you think of the Ford Amphitheater, for example, it's an amphitheater, super cool amphitheater, award-winning amphitheater, but an amphitheater nonetheless. Everything else that we're building is very, very different. Yeah.
When you first kicked this off, did you ever envision that it would accelerate at the rate it has?
No, I didn't. A couple of reasons I didn't. I didn't understand public-private partnerships, and I didn't understand sort of how the financing of these projects would take place. And so, I set out to build the Ford Amphitheater as a project that I did in my own hometown, right? It's where I live. As a music fan, I just saw a need to build venues that were more fan-centric, more artist accommodating. And so I wanted to start with the Ford. And in a lot of ways, the Ford has been a test case for me, learning how to build artist accommodating features, how to build fan-centric premium, right? So the biggest thing that is missing in today's music venues is they were built back before sort of the demand of the fan today. What is the fan demand today? Fan demands rideshare, for example.
Yeah.
Most amphitheaters, 90% of amphitheaters were built 40 years ago, right? So there wasn't rideshare. Elevated food and beverage. No, amphitheaters don't have elevated food and beverage.
Right.
Amphitheaters don't have premium seating. They don't have suites and clubs and all those kinds of things.
Certainly not fire pits.
And certainly not fire pits. And so we set out to prove those concepts. So that was number one. And then number two is to learn how financing works with these and how we'll ultimately financing them. So, we've got a plan to build $6 billion worth of these. We have $1.5 billion of construction going on right now in the U.S. So we had to figure out how to make that work. And so that's been a big piece of learning here. And if you will, there's some tuition that's been paid in learning here in your own hometown.
No, I appreciate that and the humility around understanding that there were certain things you needed to learn and understand your whole crew. Because this is a complicated process because every time you build, you're cash heavy on the front end.
Totally.
Right?
Totally.
And it's all burn rate for the first 18 months until you start lining up those shows.
Yeah. It's capital intensive. Period. Just the whole process is capital intensive. And so you've got to be able to structure your financing in such a way that you don't totally upend your cap table, but at the same time, you have to be able to stay up with the growth and the acceleration that it's going to take to ultimately be successful in building tours and in routing venues. And it takes mass, right? So you have to have a good plan to line up your municipalities. Site location and site criteria is a big piece of that.
That's right.
So anyway, there's where we're at.
No, I appreciate it. So the valuation argument rests on the idea that the GAAP, or the general accepted accounting practices, understates what your real estate is worth because contributed land is at near zero basis.
That's right.
You tracking? Okay.
That's right.
All right. So make the case for the listener who only sees the reported number.
Yeah. So there's a disconnect in our balance sheet. And the disconnect in our balance sheet comes from the fact that when a municipality or a developer contributes real estate as part of a partnership onto your balance sheet, you book that at basis. And so if I give you something, and I give it to you for nothing, even though it's worth $100, you book it under GAAP as zero because it's at a zero basis because that's what it's contributed at. Mark to market is how you would book it if you were taking its true value, its appraised value or whatever. And that's how you would book it. So when you look at our completed 5 venues, you'd have a mark to market appraisal of about $1.24 billion. If you looked at the appraised value currently, mark to market, you would be just short of $700 million, even though our GAAP appraised or our GAAP value is $402 million. So there's a disconnect there. of about $250 million today. Over the course of the next 18 months, that disconnect will grow from $400 million to about $1.24 billion. So there's the disconnect. So the question an investor has to ask himself is, okay, one, do I believe the mark-to-market value? And if I do, what is the per share value of the mark-to-market assets? Well, on a completed basis, it's around $12,
yeah.
right? So there's the completed basis. Today, what is it? It's about $7 or so today. And so the question an investor has to ask is, can he finance this? Can the company get financed all the way from today to completion? And so there's the analysis an investor has to do. And there are investors that are skittish, right? Or they don't believe that you're going to get there. Then there are investors that do believe you're going to get there, right? So you look at the sort of the retail trend right now is to sell the stock, all right? The institutional trend right now is to buy the stock. Heaviest buyers in our stock today is Vanguard, BlackRock, Blackstone, Citadel. We're up to 34% of the volume in our stock every day are institutional buyers.
Very good.
And so you have that, there's sort of the disconnect today. I think a lot of that too changes as you start to open them, right? So October 23rd, you open Broken Arrow. These venues will produce $25 to $30 million a year in EBITDA. You open a big one like in McKinney, that'll come in March. And, I was just down there yesterday. It's unbelievable what is going on. We've got 500, 600 folks on that job site every day. And you're pouring concrete and lifting steel. And, we spend today about $1 million a day in construction in our projects. And so it's capital intensive.
Yeah, the multipliers are definitely there.
Yeah, totally.
Are you taking some of those crews across state lines or do you have a dedicated construction team?
So there are crews that cross state lines that are in the construction site at Crossland. So Crossland's our GC.
Okay.
Crossland's building Broken Arrow, and Crossland's also building McKinney. So Texas and Oklahoma. And they move their own people back and forth. Sure. But that's how that works.
So there's some job security there for some of those folks.
Oh yeah, totally.
That are diving in.
Totally.
Well, when we come back, I want to take a closer look at some of the testing points and the proof points for the financial equation that surrounds Venu. As you know, the stock is trading right around $3 to $3.10 right now, and we're going to understand why we're experiencing that dip and what they're prepared to talk about as it relates to increasing and closing that gap to completion. That was a little modicum of clarity for me there. That was very helpful. So when we come back, we'll hang out with J.W. Roth a little bit more. He's founder and CEO of Venu, and we're going to get to know the financial model a little bit closer.
Leonard Skinnard. Live. Saturday, September 19th, Ford Amphitheater. With special guest 38 Special. On sale Friday, 10 a.m. at leonardskinnard.com. Leonard Skinnard. Live. Produced by AEG Presents.
Picnic Basket Catering Collective. Call or find us online.
Pain doesn't just announce itself, it changes how you move. And when movement changes, everything else follows. That's when experience and coordination matters most. Dr. Craig Yeager, orthopedic sports medicine surgeon here at Colorado Springs Orthopedic Group, board-certified, fellowship-trained specialists treat the full orthopedic picture from head to toe. With our walk-in express care, advanced MRI and CT imaging, and physical therapy at 2 full-service locations, your care stays connected. Schedule today. Colorado Springs Orthopedic Group, because movement isn't optional, it's personal.
One thing I can guarantee you never thought about as a small business owner: podcasts are way more important than you realize. One 30-minute podcast session could create over 50 pieces of content across all your platforms: TikTok, Instagram, Reels, Stories, Shorts. Transcribe that podcast. Now you got newsletters, blog posts, client resources, website copy, and that's all from one conversation, potentially solving all your visibility issues. Top of mind beats top of skill. And it's not even close. You show up ready for a conversation, and we handle literally everything else. That's months of content, visibility solved, and stress gone. Book your first session at treehousecw.com.
All right, we're back here, second quarter Business Digest Radio. I'm your host, Dierks Hobbs, and thank you to our sponsors, one of which is here today, Venu. These are the folks that have the 40 Amphitheater up on the north side of southern Colorado Springs, here in southern Colorado. Also, our friends over at the Colorado Springs Orthopedic Group, and of course, our friends at the Picnic Basket Catering Collective. So some great folks. And we're about to move this program over to Cumulus Radio. So if you listen to 740 AM with Jim Arthur and some of those other great business folks, we're going to join that crew here in the next couple of weeks. And we'll be doing a show, what looks like about every day. So business is perking up here in Southern Colorado, and we want to make sure you're well informed and know what's going on, where the opportunities are popping up here in Southern Colorado in our major economic ecosystems, such as aerospace and defense, cybersecurity and entertainment and hospitality and all things like that. A new company just came online earlier this week. Citra just raised first round or Series A of about $15 million. They're going to put some of that towards operational cost and some investing in software and solutions that will ultimately serve to identify upwards of 40,000 man-made objects in our orbit right now around the Earth. So, and that doesn't even count the millions of pieces of debris that are out there. So this technology actually goes up and identifies the various players that are in orbit right now and determines whether or not they have nefarious goals or if they're just kind of a neutral player. But it's basically a threat detection system that is going to help our mission players here, whether it's Lockheed Martin, Boeing, Northrop Grumman, any of the big primes in the region, understand what those apparatuses are doing up in space. So hopefully that will keep the threat components down, but obviously our mission players like the United States Air Force and Space Force will have a good ally in Citra Space Corporation. Check them out online. Like I said, they just completed a Series A, and we'll probably be doing some secondary rounds here. Somebody who's not unfamiliar with raising capital is across the board from me, J.W. Roth, founder and CEO of Venu, who has brought us the 40 Amphitheater here in Southern Colorado. And it has been a real treat to see this thing go.
It's been fun.
And anything you would do different in this, as you just look back on the first few seasons now that you've got under your belt, anything you would do different?
Oh, totally. I mean, there's learnings that have happened. That's why I did it. I mean, you build things like this, and if you haven't learned something, then something's not right. So there's some things I would do different. There's some learnings that have happened, and I say this all the time. There's tuition paid in building something big. I hear, there's always the chatter, right? And the chatter is that he did this wrong or he did that wrong. It's probably right. And at the end of the day, if it was easy, my ex-brother-in-law would be doing it. So it's things aren't easy, right? So there's always learning. So the answer would be yes.
I can appreciate that, JW, on a much smaller scale, mind you, but I can certainly appreciate that because it is not easy to take something from a visual concept into reality and get people to buy into that. Yeah. And then as you're
not following anything, right? I mean, it's nobody had done it before. Nobody had sold fractional ownership. Nobody had, done any of these kinds of things. Nobody had built clubs. Nobody built the premium sort of country club model like what we built. So a little bit of that you're plowing, new field.
New field, that's for sure. All right, well, let's get down to some brass tacks here. It says if the value is so clearly there in this particular project for all of Venu, then why is the stock down? That's a lot of consumers, a lot of investors or would-be investors are saying, well, look at where it is right now.
Yeah. Well, my answer would be and I would disagree with anybody that says it's clear. It's not.
Fair.
It's foggy, and there's where the opportunity lies. You're either going to bet with Venu or you're going to bet against Venu. So, if it was crystal clear, and we had a crystal ball, the stock could be to the moon.
Yep.
But we don't. And so there's an apprehension by some investors, and it kind of circles around three things, right? First question is what is the value of that balance sheet really? Venu says it's $700 million today, growing to $1.24 billion. That's what JW says. Somebody else might value that differently. I'm using just appraisers that appraise stadiums, and that's how I've done my appraisal. So there's number one. Number two, what will these things earn? What will the content be? You're talking about something that is multi-seasonal. It's multi-configurational. So only about 50% of our new venues are music. So you can't compare this to other amphitheaters or other strictly music-centric venues, because these venues incorporate theater, can incorporate AI-generated content. Think about us building out, I'm just going to throw this out, a Whitney Houston experience where you're using AI to create a lot of this. We have pulse systems that are built in. So, these are 180 degrees plus the roof, immersiveness of the ceiling. And so, there's a lot of content here that is not the traditional content. So what is that ultimately worth? We think we know what that's worth. We think it's 12,500 seats on a multi-seasonal basis is worth about $25 million or so a year in EBITDA. Big ones like McKinney, worth about $50 million a year. So there's sort of the second piece. Then what is ultimately the highest margin piece of revenue for these venues? Naming rights, for example, sponsorship. We're just getting ready to think through the announcement in McKinney of our naming rights there. Is that going to be a big number or is it going to be a little number? Well, there's sort of your bet, right? What does future naming rights look like? So that all plays into it. But I think the biggest piece of it is, what is the capital outlay here? Can Venu raise the capital to do what it's doing? And so I think those are the disconnects in the stock. And if all of those things were as clear as they are to me, the stock could trade at $25 a share. But it's not. Not everybody looks through the same glasses that I look at through. So, there's that piece. And then the last piece is who's sort of buying the stock today? Institutions are buying. That's the primary buyer of our stock today, are institutional buyers. And they're making a bet that we're going to answer the content question. They're making a bet that, this three-prong approach to financing, which I've been doing now, is going to work. I believe heavily in this three-prong financing model. And then ultimately, will these venues create, $200, $300, $400 million in EBITDA when you have $6 billion worth of them?
Yep. Now, you guys recently joined the Russell 3000.
Comes this Friday.
Okay. And what do we think about the Russell 2000?
It's exciting, right?
Yeah.
I mean, it's the 3,000 biggest companies in the country that the Russell thinks are going to be winners, right? So I'm excited about it, but I stay excited about that stuff for about 2 minutes, right? Then I'm back to the grindstone.
Right.
It's what I do. I grind it out every day, and we hit singles and we steal bases. I tell my team every single day, we're a lot like the old 70s Reds. We steal bases, and we play to win. Okay. And so I get back to winning. It's great to have the Russell. It's great to have Billboard always patting you on the back, or Polestar. Or
yeah, sure.
But you got to be careful listening to that sort of news and just get back to playing ball.
So who are you listening to as you're driving this thing? I mean, who can get in there and say, we need to be more aggressive here or more conscientious here? Really
good advisors in the space. I have a handful of them that speak into me. Greg Maffei, he's just stepped down as the chairman, CEO at Liberty Media. I listen to him a lot. I have a really good banking team around me that are very well thought of in in this space, and just a lot of people that are in my corner that are sort of speaking to you as you go along. Well, the worst things you can do is isolate yourself, and that's one of the things we haven't done. We have been very collaborative with our vendors, very collaborative with the industry. You have a lot of artists that speak into how we do things, and what they see. Niall Horan's has been a great advisor. Dierks Bentley's coming this next week, playing the amp. But at the same time, he's also giving a lot of opinion on how things are sort of progressing in his world. And then you have all of this new generation of content coming. You have a lot of things that AI threaten in our industry. Then you have a lot of things that AI support in our industry. And so you're trying to get your head around all of that kind of things. And we've got a lot of good advisors and good folks that are speaking into us, but it's important to keep your ears open.
Yeah, you've got to do that, because you start getting on one rail,
you're in trouble.
You could get sideways in a quick hurry.
Yep.
So help me understand how the index inclusion actually changed the demand for the stock and the size.
It's mostly visibility, right? So when you go into an index like the Russell, you become visible to a lot of institutions that had no clue who you were before.
That's right.
And so we're picked in the Russell because we're a player in our space, in entertainment, in the venue space. And so that opens us up from a visibility standpoint to a lot of institutions that will now follow us. Do they automatically start buying your stock? No, they go through the reconstitution phase. It'll happen on Friday. But then from there, you just go on the radar, right? And they're going to follow you, and they're going to see the milestones that you achieve. And you'll go from there. So it's super important. And it's a lot of credibility that comes with that. And I think it's good for our shareholders long term. I've been a buyer of our stock. I just bought another $250,000 in this last. I have to file all my reports so everybody knows what I just bought. But at the end of the day, I'm continuing to do that, and it's not just because of those kinds of things. It's because I believe in where the business is going.
Very good. When we come back, we'll do a little deeper dive into some of how he plans to help shareholders not sink, and make sure everybody understands the vision from the standpoint of the advice that he's taking and where he wants to take the project when we come back.
Leonard Skinnard. Live. Saturday, September 19th, Ford Amphitheater. With special guest 38 Special. On sale Friday, 10 a.m. at leonardskinnard.com. Leonard Skinnard, live. Produced by AEG Presents.
Picnic Basket Catering Collective. Call or find us online.
Pain doesn't just announce itself, it changes how you move. And when movement changes, everything else follows. That's when experience and coordination matters most. Dr. Craig Yeager, orthopedic sports medicine surgeon here at Colorado Springs Orthopedic Group, board-certified, fellowship-trained specialists treat the full orthopedic picture from head to toe. With our walk-in express care, advanced MRI and CT imaging, and physical therapy at 2 full-service locations, your care stays connected. Schedule today. Colorado Springs Orthopedic Group, because movement isn't optional, it's personal.
One thing I can guarantee you never thought about as a small business owner: Podcasts are way more important than you realize. One 30-minute podcast session could create over 50 pieces of content across all your platforms: TikTok, Instagram, Reels, Stories, Shorts. Transcribe that podcast. Now you got newsletters, blog posts, client resources, website copy, and that's all from one conversation, potentially solving all your visibility issues. Top of mind beats top of skill. And it's not even close. You show up ready for a conversation, and we handle literally everything else. That's months of content, visibility solved, and stress gone. Book your first session at treehousecw.com.
All right, welcome back to the Business Digest radio program. I'm your host, Dierks Hobbs. Welcome. I hope you're having a good business week here in Southern Colorado. We are here with J.W. Roth, who is the founder and CEO of Venu Holding Corporation, one of the few publicly traded companies based in Colorado. So that's pretty cool stuff. And the only one that's active in Southern Colorado, and certainly Colorado Springs.
Yeah.
That's got to feel pretty decent.
It does.
This is
We
hometown,
enjoy
man.
it. It is hometown. They either love you or they hate you. Right?
Well,
one or the other.
Yeah, welcome to the show.
Yeah, welcome to the show.
So, well, we're doing our best in business this September, and I want to encourage everybody to get out there and vote for your favorite organization. Now, I will tell you this year's best in business is a lot more sophisticated than it has been in a number of years, because we have done a deep dive with the industry players that are actually shoring up our economic engine down here. So these are the big players like the aerospace and defense, cybersecurity companies, and organizations like that. We're also representing companies from Douglas County south to Trinidad. So this is our ecosystem. This is our economic engine, and we are starting to pop up on the radar of for a lot of different companies and a lot of different industry sectors. And we want to make sure that we have the gravitational pull and the stickiness from a legislative standpoint that makes businesses want to be here, first of all, and then want to stay here. So business owners, I'm appealing to you to take a very close look at the election cycle coming up and make sure you understand what the promises and the philosophical doctrines promise to deliver, and equate that to how it's going to impact or affect the way you do business here. Is it going to allow you to hire and develop your business, expand your business, do capital improvements, or are you going to see a contraction in that because there's so much administrative burden on you? So pay attention this election cycle, folks. We have a chance to really keep Colorado a business-friendly environment. And speaking of which, JW, when you first kicked this off, did you sense that Colorado was fairly business-friendly? Did it feel that way as you were launching this thing?
Yeah, and to be honest with you, I wasn't really a Colorado focused entrepreneur. I was Colorado Springs focused entrepreneur.
Fair.
So, the state of Colorado had very, very little to do with my thinking.
Mm-hmm.
I was
because you were going to do this.
I was doing this no matter what, and I'm a Colorado Springs guy, right? So, and we're a 5th generation family here. And so at the end of the day, I was more conscious of Colorado Springs. I got to tell you, John Southers was a great mayor. Yemi's been a good mayor. Yep. So at the end of the day, I was really more focused on sort of the support and the business environment that we have here in Colorado Springs.
Now, when we as observers look at the Texas landscape, it is a very business-friendly environment.
No question. Now, I got to tell you, so is Oklahoma. Oklahoma has been very supportive of what we have done. They've got a great, one of the best lieutenant governors in the country. And I love doing business there.
Very good.
Yeah.
All right. Well, let's poke the bear here a little bit.
Yeah.
Okay. And I just want to get you to talk to the people out there that are just generally cynical about the project at the moment. Fair?
Yep. Fair.
Okay. All right.
Yep.
So you're capital intensive.
Yep.
You're early.
Yep.
You're not yet profitable.
Yep.
Okay. And you're burning cash.
Yep.
And to the tune of $1 million a day down in McKinney, for example.
That's right.
So is the market wrong for being cautious?
Not at all. I mean, not at all.
Okay.
Warren Buffett always says it the best, right? You buy when everybody's fearful, and you sell when everybody's excited, right? That's how he has built his, and he's done a pretty good job.
Yeah. Good start.
As a good start. Yeah. So, but at the end of the day, all kidding aside, I would be cautious too. I mean, a company spends a lot of money. It's capital intensive. So you have to ask yourself, are they going to, the bet's simple. Can they raise the capital? And then will they be profitable? There's the only question you have.
Sure.
And over the next 8 months, that question gets answered, right? Between here and the next 120 days, you open Broken Arrow. And that's a big piece of sort of a check mark that'll go by, yep, this is going to work. And then when you open the Monster, then there you go. And then about every 180 days after that, I'm going to open a brand spanking new one. I was ran into somebody the other day that said, when are you going to start building in Oklahoma and in Texas? I'm thinking to myself, where have you been?
Yeah, where have you been?
we're spending hundreds of millions of dollars building in those markets. And, the proof is in the pudding. But yeah, to answer your question, there's no reason you shouldn't be cautious. With that said, I'm cautious, but I'm a buyer. Vanguard's cautious, but they're buying the stock. Citadel's cautious, but they're buying the stock. If you loved the stock or you loved the business at $10, then you should be really in love with the business at $3. It's a much better business today at $3 than the business was when it was at $10 and even when it was at $18. Much better business today, much closer to sort of that goal line of becoming profitable, right? Mm-hmm. And so that's the way I would answer. I wouldn't bet against us.
So explain that a little bit more. I would be more excited or as excited at $3 as I was at 10 as an investor.
Yeah.
Help me get there.
So if you look at our valuation today from a mark-to-market standpoint or a valuation today based on a multiple of earnings, knowing that, we project about $25 million a year in EBITDA on our 12,500 seaters and $50 million a year in EBITDA on our 20,000 seaters. You look at our expanded construction schedule, and you kind of back into, where you think this thing is worth from a multiple of earnings standpoint, right? Mm-hmm. So there's two ways you're going to evaluate this. You're going to evaluate it on what do I think the value of the business is on a mark-to-market basis of assets, or where do I think it is in a multiple of earnings? And that's the way you have to say it. But the risk is, can you get there, right? Can you get from here to there? And there's the risk. If you say no, you should sell the stock. If you say yes, you should get a snow shovel and start buying it.
When do you get nervous about that expansion project?
I'm not nervous about the first 5 at all because we're under GMP contracts on the majority of what we're doing. I've got my arms around the financing of how we're going to get there.
Got it.
It's future that would make me, and I wouldn't say nervous. It's just, I don't know exactly timing as we roll out. For example, we're getting ready to announce another 3. And so I'm marching toward 25 of these. And so as I do that, there's things that aren't crystal clear that are sitting out there. But these first 5, I don't have an ounce of nervousness about.
Ford, McKinney.
Well, you got Broken Arrow, McKinney, and you got Tulsa. You've got El Paso, you've got Houston and Chattanooga. So there's your 5. 6 is Ford's the 6th one.
Okay, Gotcha. Okay, and you've got 3 more coming on.
3 more coming on the horizon.
And are we close? 6 months away from announcing? What do you think?
No, we'll be in the next 90 days. We'll be announcing as we go along here. I've already made announcements that I'm going to northern Colorado. Mm-hmm. And so that announcement's coming fairly quickly. And I've already made announcements that I'm coming from Florida up through the Carolinas, and those announcements are coming as well. And we've just got really good financing partners in what we're doing. Fractional ownership makes a big deal, right?
It does.
Fractional ownership and sort of what we have done there has really changed the sort of risk factor as it comes to capitalizing these.
So what's open, what's under construction, and what will just be a pipeline conversation at this point?
Yeah. So 2 small ones are open. That's Gainesville, Georgia, and Colorado Springs, the Phil Long Music Hall.
I forgot about Gainesville.
And then you got the Ford Amphitheater open. On the amp side, we will not build another amphitheater. We're done building amphitheaters. From now on out, we're building multi-seasonal omni-content venues. And so the next one to come online there is Broken Arrow, the Tulsa market. That'll come online in October. We just had a naming rights announcement down there with Region Bank.
Saw that.
FF&E is going in now. All of the undersigned infrared systems are going in now. That place is unbelievable. Followed by 1st of March with McKinney. That's the granddaddy, right? It'll be the largest multi-seasonal, multi-configurational, omni-content, fully seated venue ever built in history. It's an incredible, push $500 million. But it is unbelievable. The city of McKinney has been such a great partner. I did a deal yesterday now with Troy Aikman, and I did some tours and did a presentation last night to Fire Pit Suite owners and just anybody that wanted to come that follows the company. And we stood out there and looked at that site. It's at 121 and 75. And when you hit that piece of interstate, which is one of the most trafficked interstates in the U.S., and you look over there and you see that, if you don't ask yourself, what the heck is that?
Yeah.
Something's wrong with you. So we'll follow that up with El Paso, follow that up with Webster in Houston. It's going to be a beautiful spot there. And then we're building on the Chattanooga. We're building in Chattanooga on the Tennessee River. About 150-ish or so slips where you'll park your boat and come into the
Is it on one of those peninsulas out there?
Yeah, it's right. It's right down from the bridge, about 200 or 300 yards down from the bridge.
Yeah.
But it is an unbelievable site.
That's a pretty venue.
Yeah. And we got 3 more we'll be announcing after that. And here we go.
Here we go. Well, you're awfully dependent on relationships in general. Okay.
Yep.
But you also have a tight relationship with AEG, Live Nation, and others.
Yeah.
How strenuous are those relationships at times? Okay. As you guys are building this out, and how dependent are you on those? Say one of them moves on to something else.
You were always a frenemy, right? With anybody in this space, and everybody is. There's a lot of interdependencies that go on between managers and artists and venues and promoters and just all of the different players that are forced to play with each other in the sandbox, right? And so I can't tell you how appreciative I am of AEG. They've been a great partner in Colorado Springs. I look forward to furthering that relationship as we expand and grow. Live Nation's been a great partner for us. I know that there's been talk about, the issues that they've had with the Ticketmaster and all of that kind of thing. But at the end of the day, sometimes those relationships, the Ticketmaster Live Nation relationship, is a good thing. It's a good thing in the sense that there's efficiencies that come with those kinds of inner relationships. We have a relationship with Live Nation in Broken Arrow. We have a relationship with Ticketmaster in Broken Arrow. We have a great operating relationship with Live Nation in McKinney. And so, my job every day is to cultivate those relationships and make them more friend than enemy in the frenemy space. And part of it too is working together, right? So if I know where AEG is going, or I know where Live Nation is going, probably best that I don't go to that same spot if I want to maintain those partnerships. Made the announcement of Centennial in Denver. We're building an unbelievable venue at Arapahoe Road and Highway 83. We bought that entire piece of property there and be the first indoor where we sell 50 fire pit suites inside. It is totally immersive content, and it's an incredible place. But the first thing I did when I decided to do that was pick up the phone and call my friends at Anschutz and say, look, this is what I'm doing. And I want you to give me the old blessing to do it. And that's what good partners do.
Okay. When we come back, we'll look at the next 12 to 24 months and what you as an investor, if you are involved today, or a prospective investor, should be looking for as the company starts to bend up into cash positivity. Back in a moment.
Leonard Skinnard. Live. Saturday, September 19th, Ford Amphitheater. with special guest 38 Special. On sale Friday, 10 a.m. at leonardskinner.com. Leonard Skinnard, live. Produced by AEG Presents.
Picnic Basket Catering Collective. Call or find us online.
Pain doesn't just announce itself, it changes how you move. And when movement changes, everything else follows. That's when experience and coordination matters most. Dr. Craig Yeager, orthopedic sports medicine surgeon here at Colorado Springs Orthopedic Group, board-certified, fellowship-trained specialists treat the full orthopedic picture from head to toe. With our walk-in express care, advanced MRI and CT imaging, and physical therapy at 2 full-service locations, your care stays connected. Schedule today. Colorado Springs Orthopedic Group, because movement isn't optional, it's personal.
One thing I can guarantee you never thought about as a small business owner: podcasts are way more important than you realize. One 30-minute podcast session could create over 50 pieces of content across all your platforms: TikTok, Instagram, Reels, Stories, Shorts. Transcribe that podcast. Now you got newsletters, blog posts, client resources, website copy, and that's all from one conversation, potentially solving all your visibility issues. Top of mind beats top of skill. And it's not even close. You show up ready for a conversation, and we handle literally everything else. That's months of content, visibility solved, and stress gone. Book your first session at treehousecw.com.
All right, good afternoon, ladies and gentlemen. Welcome back to the fourth quarter of Business Digest Radio. I'm your host, Dierks Hobbs, hanging out with J.W. Roth, founder and CEO of Venu Holding Corporation, based here in Colorado Springs. That's right, a New York Stock Exchange traded company based here in Colorado Springs, and there's more to come. There's a lot more to come, so stick around because it's going to get interesting here in this region. There's a lot of activity around, and somebody else with the last name Roth might be doing something here soon, which is pretty cool.
That is.
Proud of that kid?
I'm proud of that kid. You know dads that have sons that follow them into business, typically it's Tommy Boy, right? It's total disaster. And it's Tommy Boy. Yeah. I have been so fortunate with my kids. Yeah. My kids have been rock stars. I mean, you think of Mitchell, and I get a lot of credit for what has been built at Brands and Colanova and Whole30 and all of that stuff, and at Roth, right? But at the end of the day, and I've said this a bazillion times, that kid's better than his dad. And so he's the opposite of Tommy Boy. He is a great businessman. He is a great thinker. He's a good operator. And at the end of the day, Roth, and Colanova has grown to what it is today. But where it's going is really on the shoulders of Mitchell. And I'm just proud of him.
You know what I mean? Should be. Yeah. And he was here not long ago. You can go back in the archives on Spotify or YouTube, iHeart, whatever you're listening to, and check out that Colanova interview that we did with Mitchell Roth. They're getting excited. They're about to do an S1 here.
Yeah, they are.
And that might be number 2.
Yeah. I mean, that thing is it's unbelievable. Yeah. I mean, he's grown that thing to where it's came from nothing, really. Yeah. I mean, when I started that with him, it came out of our packing businesses, and it started at zero. Now the thing will have $1 billion market cap when he takes it public, and it's unbelievable. It's just unbelievable. It's grown to the number one chilled protein manufacturer in the United States today. Services almost every grocery store in America.
I did know that.
Yeah,
so
it's incredible.
This is a pretty exciting thing, but it's certainly almost a rite of passage taking a company public if you're a Roth in Southern Colorado. Yeah. All right, well, let's get back to business with Venu and all the things going on out there. I know you got a lot. This organization has taken a lot of criticism, a lot of armchair quarterbacking out there, but there's a lot of very sophisticated investment houses out there that are leaning into this conversation because they understand the monetary apparatus, the financial model itself, and they understand that there is lag time when you're cash intensive on the front end and you're waiting for these things to get built and come online. You can't pull that slot machine lever until those lights go on. And it takes you sometimes 12 months to build something out of the ground like this. So take us through the next 12 to 24 months, JW, because, people are like this. They see it and then they're like, okay. Yep. And they just get a little nervous. Yep. Okay. So take us through your best pitch, for lack of a better phrase.
Well, I mean, and that's exactly what it is. I mean, I firmly believe there's never been a better time to own our stock. Now, am I telling you to go buy it? No. But if I was you, I would. So with that said, the Russell 3000 is coming this Friday. That's going to be the first sort of step. Second step is all the financing programs and processes that will happen between here and sort of October of this year when we open Broken Arrow. That's a massive win. When that happens and our company becomes profitable as a result of Broken Arrow, and then ultimately McKinney, I don't think there's a more dangerous bunch of folks than us when we have $25 to $80 million a year in EBITDA. Because from there, it's like in tennis, right? It's really difficult to learn how to get that ball over the net, right? But once you learn and once you know how to do it, you become dangerous, right? I spent the day again with my friend yesterday, Troy Aikman. He talks about it all the time. It's getting there that is the tough part. But once you're there, and you understand the dedication that it takes and the commitment that it takes, and mostly the focus that it takes, you become dangerous. And Venu is very, very close to becoming dangerous. That's what excites me. Well, every day I get out of bed and I think about it.
Well, and you've got a C-suite, for lack of a better phrase, that they've left great jobs to come do this. Yeah. So think
about Will.
There's a hint in that.
Yeah, Will Hodson. The guy left as the president of House of Blues a year and a half ago, and he came here and he said, let's go build something great. Vic Sutter, who's my chief operating officer, left Live Nation, came here and said, let's go build something great. Terry Liebler, 22-year Live Nation veteran, came here as our president of growth and strategy and said, let's go build something great. We have got a business development team and a C-suite team that is dangerous. And over the course of the next 120 days, I used to say this 3 years ago, but every time I'd make a pitch 3 years ago, my pitch started with, close your eyes and imagine this, right? Because there wasn't anything to see. Mm-hmm. Today, it's not that. It is get your eyes wide open, because over the course of the next 120 days, you're going to watch this ball leave the park in a way that you'll never imagine. So when you talk about being, kind of like, you know what I mean? Hesitant. Mm-hmm. There's one or two things you're going to decide. You're going to sit here and watch it happen, or you're going to jump in and be a part of it happening. You know how I think.
I do know. I'm getting there.
Yeah.
Sarah Rothschild's also another senior member.
Incredible. She's new to our team, came from the Sphere, MSG. She ran treasury and investor relations there. I brought Sarah here for a lot of reasons. I chased her for a while trying to get her to do this. And she finally made the decision to come. She left the Sphere, left MSG, and came to Venu. And her whole job is to tell this story. Because in a lot of ways, we are the Sphere story. Everybody said the same thing about James Dolan, right? They said, can he finance it? And a lot of people thought he couldn't. And his stock just stayed right down here. Couldn't make the stock work. Can he put content in it? Will it be on schedule? All of those things. But he remained focused and committed. And he sort of didn't listen to the chatter of the sort of cheap seats, right? Mm-hmm. And that's usually where chatter comes from.
Oh, yeah.
Most chatter comes from people that have never done it.
They're not on the field.
They're not on the field.
Yeah.
They're eating a hot dog, sitting up in the cheap seats, drinking a beer, telling you how to do it. You can't listen to that. You have to stay hell bent. And we are. And so was he. And look what happened. He took off. His stock took off. His company took off. And I am a big admirer of the Sphere. Mm-hmm. And over the next 120 days, you're going to watch the cover come off this ball as it leaves the park. And there's just two ways you're going to do it. You're going to do it from the cheap seats, or you're going to do it down on the field with us, putting your money where your mouth is.
Well, and that's one of the things I've appreciated about you and watching this whole thing unfold, as I said in the interim there. You have not deviated course. And most entrepreneurs, when they get far enough downstream on this, they start to get distracted with fancy equations and other derivatives and ideas that come along. You've stayed true to the vision.
Yep.
And the execution is now starting to come online.
That's right.
I mean, we saw what I would consider by your standards now a base hit here in Colorado Springs.
Yep.
Okay. You're about to come online in Broken Arrow.
Yep.
Okay. That's going to be a nice double, if you will.
Yep.
Okay. And then McKinney's kind of you're out of here. Right.
Totally.
So I appreciate all that. You did an interview not long ago where the guy said, you're probably one of the most undervalued companies out there.
Yep.
How did that sit with you?
Two ways. One, from an opportunistic standpoint, I thought to myself, it's interesting. And he's right. And people should be listening to that and buying our stock. The second piece of that hits me is, have I done a good enough job of telling our story? And I think the answer has been yes on both sides. And I understand the caution on people waiting to see what's going to happen here. But I can tell you right now, I'm as hell-bent today as I was 5 years ago. I'm as hell-bent today as I was back when I started Roth. And look what happened there. We went from zero to hundreds of millions of dollars to now Venu, the same exact thing. I am determined. I am confident. And I've got the right team. It's one thing when you're just a lone ranger, right? We're not. We're an army. And we're a dangerous army. And we're an army that is made up of people that have been there, done that. And the last thing I would do is bet against them.
Fair enough. Tell me one private conversation you and Troy have had.
Oh, boy, there's been a bunch of them.
In terms of
I think yesterday was
division.
I think one of them was yesterday when we sat down and he and I were shooting the bull about 8. I was an investor in his company, 8 Beer.
Okay.
And he was an investor, $1 million investor into Venu. And we sat there and we talked about track record. And I talked to Troy about, I mean, he's a big believer in what Roth did and what happened at Brands and where Culinova is going. He built 8 on the idea of better for you ingredients, better for you products. And that's what 8 Beer is. And so we had a discussion yesterday, just he and I sitting around talking about sort of what the rearview mirror looks like of these businesses and how we got to where we are. And what the trust is of those relationships, right? I have to trust him in a lot of ways. And he's got to trust me in a lot of ways.
That's right.
Because we're out there we're not building little stuff. We're building big stuff.
With your name on it.
With our name on it, right? My name and his name.
Yeah.
And so at the end of the day, we had a long conversation about that and how important that is. And so that was a private conversation that is one I can share that he and I had yesterday.
Just kind of looking off into the sunset saying, look what we did.
Yeah.
That's
exactly right.
Well, I want to give you a solid minute and a half here to just kind of appeal to the listener, help them understand the grounding underneath what you're doing, the foundation you're building on, and then what you would advise to the best of your ability, being an SEC traded company. But what you would advise them to consider as they're looking at Venu as an opportunity.
Yeah. In every business, there's a life cycle of opportunity, right? And those, they don't come along all the time. Venu is an opportunity. I am telling you right now, Venu is an opportunity that you won't see again in a long time in the entertainment space. We are doing things that nobody has ever done, and we're winning. And there's also a Gantt chart, right? There's a timeline in opportunities. When you're 3 years away and you're saying, this is what we're going to go do, then there's a timeline that's sort of halfway down the line. This is what we're doing. And then there's where we're at right now. Look at what we've done and what is happening as we speak. There has never been an opportunity like this in our company, and there never will be again. So what you have to decide as an investor, do you want to sit here and watch it happen, or do you want to jump in and enjoy it happening with us? There's nothing wrong with either answer. I know a lot of people that are going to sit here and watch it. And then there are going to be people that are going to jump in and they're going to make a tremendous amount of money. And I can say that as a CEO that believes in his company, believes in his vision, but really believes in his team. I've got a great team. I've got a solid bench. And right now we're up, we're up. And it's the 9th inning. There's where we're at.
Fair enough. J.W. Roth, founder and CEO of Venu Holding Corporation. They're building projects all over the United States, and it's certainly an exciting company to watch. It's the only active New York Stock Exchange company here in Southern Colorado, and also very exciting, and soon to be a second one coming online. But I want to encourage you to take a close look at the stock and the company itself, Venu.live. Let's make sure we get that right, and check out the company and its portfolio and see what you can learn and understand about this opportunity, which may be one of the unique opportunities in investment in the United States, certainly in the entertainment industry today. JW, thanks very much.
Thanks for having me.
Really appreciate
the heck out of it.
And congratulations on your success.
Thank you.
Keep it up, brother. All right, folks, we'll see you next week when we talk to the folks who are making the transition from Ent to Wings here in Southern Colorado.
You've been listening to Business Digest Radio, Colorado's source for business, workforce, and economic development news. Find us on Spotify, iHeart, Apple Podcasts, YouTube, and at socodigest.com. To be featured on the show, email info@coloradomediagroup.com.